What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at Bitcoin as well as other macro charts and indicators for the crypto world. First, let's start off with fear and greed, and as you can see, we are still in extreme fear territory, and there's something in the charts that I think is going to show whether or not we stay there or head further down again. But you can see as we zoom into the last, well, let's do 3 months, you can see after we bottom down in extreme fear, we are getting some higher lows and higher highs. So hopefully we start to see this trend back up into neutrality territory. As far as almanac data, you can see we had one of our lowest Novembers ever. However, in the past, when we've had pretty bad Novembers, you can see how the Decembers are to fall. In 2018, this was the bottom after we made a peak in late 2017. So that was the bottom of that cycle. 2019, this was after the mid-cycle top. And what I am comparing the current market conditions to now, because the Fed was switching from quantitative tightening to quantitative easing, and eventually all that money printing and rate cuts is what led us to the next market top. Of course, there was 2022, and that was that cycle bottom as well. So just from those three data points, we either had the very bottom from those instances, or it was close to sort of a mid-cycle bottom, if you will. Taking a look at our Altseason index, this thing's just been falling off macro-wise. So as Bitcoin is going down in price, or at least has gone down lately, altcoins are starting to bleed to Bitcoin, and that's to be expected whenever we get these bear market pullbacks, and it is technically a bear market. And as far as the rainbow chart, our log regression chart, you can see that we're just sort of itching into that teal zone, I guess you could call it. You can see that range of 68 to 88K. Now, the curious thing about 68K is that is where, let's go to the weekly chart. This is, or the weekly time frame, that is where we have the 200-week moving average. So Bitcoin right now, it's at the 100-week. And I think if you're any bit of a Bitcoin maxi, or if you believe in Bitcoin, anytime Bitcoin is at the 100-week moving average or lower, in my opinion, those are can't miss dollar cost average opportunities. Even if Bitcoin is in a bear market and is going to go lower, I think if you believe in Bitcoin, that those are good macro values overall, at least for the future, if you do have a long-term horizon. Now, on this channel, I do talk about other crypto assets. I talk about Bitcoin mining stocks. I talk about altcoins. So if you have any requests for any technical analysis on those, I can do a YouTube short on them. Please comment below. Now, recently, I've been talking more so about Bitcoin and this mid-cycle sort of bottom, if we will. And we've even started to talk about what rate cuts and quantitative easing might mean for Bitcoin. So I wanted to get a little bit more into that today. Now, before I do, just something to remember, as far as my thesis and my lens for crypto, I don't totally subscribe to the 4-year cycle. I do think there's some things to be said in favor of it, but I'm watching the money flow. Where is the money flow going? And you can see that historically, the last 2 cycles, when you take a look at them overall, we have our Bitcoin season, and then Ethereum starts to do well against Bitcoin, which we are in phase 2 right now, technically speaking. And then as we get towards an alt season, we see large caps and small caps do well. And last Bitcoin cycle, when we went up to the cycle top and had alt season, that was after quantitative easing took place. We can go to the charts and even just overlay the United States Central Bank balance sheet. We're going to be referencing this a bit in this video, as well as rate cuts, and seeing if we have some sort of an idea. I wanted to take a look at, is there any sort of correlation or idea of where and when we might expect some sort of a reversal, or for Bitcoin, which is, in my opinion, a speculative tech asset, for this to do well again. So you can see right here, last cycle, when the Fed ended quantitative tightening, there was still a little bit of more downward price action to go before they really turned on the money printer. The Fed did just end quantitative tightening. So will they go to quantitative easing right now? We'll see. And I think one of the best charts to look at this is Ethereum Bitcoin. Last cycle, Ethereum's value against Bitcoin was the literal bottom until quantitative easing turned on. However, this cycle, what you can see is the bottom happened a little bit before. And I think, and I'd hope most of you would agree with me, it has been very risk on in the markets lately. And we are in an AI bubble. The Shiller P ratio for the S&P 500 shows this. So I do think there's a little bit of front running for speculative tech assets. And once QE turns on with rate cuts, I am wondering if we are going to get sort of an off-schedule type of alt season. That is something I'm very curious about. Now, as we talk about this, I'm going to be referencing Bitcoin dominance a little bit, because when Bitcoin dominance goes down, those are the good conditions for altcoins, if there are any altcoin holders out there. And also keep in mind that as we go on our way to our cycle tops, we are going to get a number of 40% pullbacks, 30% pullbacks. This has really been the cycle, 20% pullback. So right now we are at a 36% pullback from the top, whether or not this is an overall macro mid-cycle top or not. So just something to keep in mind. And actually, before I forget, I was wondering, COVID drop notwithstanding, I was wondering about how much of a pullback this was from the mid-cycle top. Yeah, 53% pullback. And that was to the 100-week moving average, which is where Bitcoin's at right now. So that was a 50% pullback if this is to go further. So yeah, you can see, let's measure that out right here. From this high to the low, it's about 36%. We'd be close to a 50% pullback if we got anywhere near the 200 weeks. So again, my opinion, no one can ever predict what's going to happen, but I do watch monetary policy to give me some sort of an idea. And if we did get another drop, to me, that would be can't miss buying opportunities for crypto. Now, a couple other things to keep in mind. I think this is a good chart to show what I've been talking about with the log regression. We spent a lot of time on this, and part of my thesis has been that we have this x-axis, which is time, and the y-axis, which is our log scale factor of 10, and that we see over time there's more of a stretch. We've measured out each cycle bottom to top gets longer by another 100 days. So we had 750 days bottom to top, 850 days bottom to top, 1,050 days bottom to top. Is it going to be 1,250, 1,350? Who knows? That would mean a top during 2026. And so we see more of this stretch. And I think this return since the halving chart kind of shows that, these tops don't always fit perfectly right after when the halving is. We have this 2012 to 2016 cycle where the top was a little bit shorter. That was around 371 days. Here it says 528 days. That was the 2017 top. 2021, we did have that top in November that coincides pretty close to that. However, Altseason was all the way back here, only 337 days. And so, yes, I know there's a tendency to look for those 4-year cycle tops. And, we had Altseason here. I wonder if we're going to get it more towards the middle of the cycle this time around. And I think monetary policy is kind of pointing to that. Now, before we get into the weeds of monetary policy, I did want to bring up the heat map again. This is showing where shorts are stacked in, and it's 94K. You can see how we hit 94K and have come back down. Now on the chart, you may have saw that little triangle I made here, and let's turn off this for a second. We'll get back to it. Turned off this, and we have this triangle. This would be, I saw somebody on Twitter say it was like a possible bullish pennant reversal or something like that. I'll have to find out the name for you guys. But what they're basically saying is if we can break above that resistance on the heat map, as well as get a reversal from this. I'm almost got it here. An ascending, this is what they called it, an ascending triangle reversal is the name that somebody on Twitter said. So if we can break up and out of it, that would be very bullish. And one of the things, kind of coincidentally, as far as timing wise, is rate cuts. Could rate cuts this week pump the markets? Rate cuts have been bullish factors in the past, but people are looking at quantitative easing as well. So the Fed is overall expected to do more rate cuts this week. And historically speaking, when the Fed has cut rates by 25 basis points, that has been bullish for the market. So we can go to our US, I believe it's INTR. Here we go. This is the US interest rates. Let's take off our moving averages. And then let's just add on the S&P 500. The S&P 500, you can see when they're cutting by 50 basis points, very fast, it's usually something's broken in the market. But when they're cutting by 25 basis points, I think we can even go all the way back to our last bubble, the dot-com bubble. When they're cutting low and slow by 25 basis points or even holding, markets can still do well. You can see 25 basis points, there's a little bit of a downturn, then holding, and you see the market's doing well. The Fed was even raising rates. But once they start cutting by 50 basis points, that means part of the economy is broken. If they're doing consecutive 50 basis point cuts, then we would worry. If they start doing that soon, then I would start to be very concerned. But if they just do a couple more 25 basis point rate cuts and even hold, I still think that can be bullish for crypto. And as far as, let's overlay Bitcoin, or what, let's even overlay Ethereum. I wonder if there's any correlation. Now, we did see the U.S. central bank balance sheet. It pumped back here, so that injected liquidity as well. 25 basis point rate cuts here. I don't really see too much of a correlation there, to be honest. And even 2016, 2017, they were raising rates and Bitcoin did well. So I do think you have to take a look at all the market factors overall. Now, as far as quantitative easing, are they going to start that? I was reading a couple articles, and they basically said, the end of quantitative easing or tightening does not mean that they're going straight into QE, at least not yet, as far as this month. So that this may start next year. Donald Trump has talked about appointing a new Fed chairman, someone who's going to be more aggressive possibly with rate cuts or QE, try to pump the markets up. And there's even been rumors about $2,000 stimulus checks yet again coming in the summer of next year, right before midterms, of course. So, we'll see if that happens. But if it does, and I do expect quantitative easing to begin sometime close to the start of next year, I do think that would be pretty bullish for markets. And a little side note, last Friday I did a live stream. It was a little bit in the afternoon. I wasn't able to do it early, got held up with some stuff. But we started talking about AI altcoins and just taking a look at the charts. I want to dive more into this in the future because whenever we get the next alt season, I do think AI altcoins could be a promising play. Anyways, let's go to the charts. So, back to Bitcoin, we just talked about that possible, reversal, ascending triangle. If we can break up above where all those shorts are stacked right here, then we have our next move up. Now, you see this yellow box here. If you're not familiar with my channel or if you don't know what the heck this yellow box is about, to me, this is an important area to break for a couple reasons. For one, if we go back to the heat map, and we zoom out, that's gotten a little bit lighter blue. That was, they were some brighter colors not too long ago. Let's go to the 2-month and see what comes in. Yeah, there we go. So we can see the next areas of resistance, 116 all the way up there. And if we go to the charts and look where 116 is, well, 116 is all the way up here. So that's curious to note. But when we were on the 1 month not too long ago, I wonder if those expired. We did see a little bit of resistance here at that 108 area. So that's gotten a little bit darker, which is a good thing. We do have our bull market support band. Let's put that right here. And I think getting through that area, the bull market support band will be important. We also have a fib extension, which has been resistance before. That's the 1618. That's right there as well. And also, just by chart patterns are concerned, if we see a top here, I'll draw it out for you quick. If we do break through on some good news of rate cuts, but stall out there, you guys see that pattern right here. That would be a head and shoulders pattern, and a head and shoulders pattern could bring us down as low as maybe even 60K if that were to play out. So we'll address that when we get there. As far as how I look at the markets, you always got to take the market that's given to you. Guys, on my YouTube channel, I don't try to get too much into the prediction game. I have a strategy, and I try to have a strategy that will do well regardless of what the market's going to do, because none of us really know how it's going to play out. It's going to be bearish sometimes when we're hoping to be bullish, and vice versa. So I have a strategy where I dollar cost in at certain values, and I put my money where my mouth is. If there's certain Bitcoin mining stocks, AI altcoins, and I think they're at good value, I'm buying in, even if there's a lot of fear in the market. So we don't know exactly when Altseason is going to play out, but I do think, what's more important than predictions is your strategy. So just a little aside there. Anyways, let's get more into the U.S. central bank balance sheet and Bitcoin. So was talking about back here in 2019, we took a look at Ethereum, Bitcoin. We can even see this reflected in Bitcoin dominance. Bitcoin dominance from the 2017 bottom when we had that Altseason. Let's go to the Bitcoin chart right here. When we had this Altseason, which was right after the peak, Bitcoin, of course, had a downtrend, and it had a downtrend, and people were flying to the most air quotes here, safest crypto asset, which would of course be Bitcoin. 59% of all money in crypto is in Bitcoin right now. And Bitcoin dominance peaked when quantitative tightening, tight monetary policy bottomed here as well. But once we started to go to QE, we could see Bitcoin dominance breaking that uptrend. This is where we made a top. Bitcoin dominance eventually made a double top. And here's where we had Altseason. Now, what have we had so far overall? Well, overall, Bitcoin, for all intents and purposes, did have a top here. Remember what I said about Ethereum, Bitcoin, and we see Ethereum, Bitcoin bottoming before quantitative tightening bottomed out. And so to me, that's curious. And one of the other indicators I think is important to watch is IWM. This is the Russell 2000. This is a good way at seeing when we are more risk on or risk off. And I was curious, what's the IWM Russell 2000 doing? You can see here we had this flush. That was the tariff scare 1.0. Bitcoin, Ethereum, they all went through a flush there as well. But we also see the Russell 2000 doing pretty well, and it's even in all-time high territory. So if the Fed starts going to QE, I do think this will go up maybe quicker than what happened last cycle. You can see we needed that liquidity injected because we had COVID. There was, high unemployment. The economy was broken for a time. You guys remember that. So we needed all that liquidity, and it just pumped the markets. Now, this time around, I don't see it, even though it's getting bad with layoffs and job openings a little bit, I don't see it as bad as the COVID times. You're welcome to disagree with me. And there are some cracks forming, especially in, possibly manufacturing or housing. But I do think this market still has more to run. For all the talk of a bubble, and I agree we're in a bubble, I do think this bubble will continue on further. So that's what we have for the Russell 2000. I want to add on the interest rates as well and see if there's a correlation here too. So as far as the interest rates, you can see the interest rates bottom out. This was like a Goldilocks scenario. Low interest rates, a lot of money printing, and then of course the Russell 2000 that pumped up a bit. As far as Ethereum, Bitcoin, this is where interest rates bottomed out, and you can see this was for sure when Ethereum Bitcoin started to make its run. Now interest rates stayed low for a while, so I don't know where the Fed is looking to ultimately bring rates. I think there's a correlation with the rates getting somewhat near where I think the US 10-year is. I'd have to check on that. But if this is true, I do wonder if this is going to start running sooner than later. For all the talks of a 2026 being bearish, I do wonder if, if we do have sort of an abbreviated bear market, kind of like Bitcoin had in 2019, that once this abbreviated bear market is done, that we just start to see it pump from all the QE is concerned. As far as Bitcoin dominance, this is just going to show us an inverse of what Ethereum Bitcoin was as well. So anyways, yeah, I think overall we do see Bitcoin dominance going down here even before the rate cuts. So, to me, like, I don't know if you guys agree with me, but I think that the market is, or at least the crypto market, is front running some of this looser monetary policy, some of this inflationary monetary policy is what I like to call it. One of the main reasons Bitcoin does well is because the U.S. government's monetary policy is inflationary, and that bodes well for crypto because it is not. So do keep an eye on these levels. This is the 50 and the 20-week moving average. This is the 100. Whichever way this breaks up or down, that'll tell us about what the crypto market's going to do in the near term. Now, as far as 2019 is concerned, from that peak, and I'm going to sort of correlate this peak with the recent peak we had in October. From that peak, it took us about, I'd say, until we for sure started that uptrend. I might even do right here because we were breaking out of this descending channel. That took us almost a year to get out of that uptrend. And going to Ethereum Bitcoin right here from that bottom until we broke bullish, you can see that was a little bit shorter, about 230 days. I'm looking at the 50-week moving average, and that's when we truly started that uptrend for higher risk assets. So with all that being said, going back over to today, I do think that as far as the new uptrend starting, that we have started earlier. And even if we're saying, maybe it's a year, do we sort of see a flush in crypto assets until maybe April and then we start our next move up? I'm just sort of thinking out loud here as far as some of these things are concerned. Remember that this is where QE ended here. And as far as the time, this still took a while. That was 567 days from that moment. Again, we have two totally different markets now. So I don't think it's a one-to-one correlation. That would put us all the way out in January of 2027. You never know. But anyways, I did just want to start kind of this conversation of, what does QE and rate cuts mean for the crypto market overall? It is a bullish factor. We have the 4-year cycle. People say, this is it. And that's true. We did get a local top here. But the thing that is very different that we can't ignore is what Bitcoin dominance is doing on a macro scale. It is what Ethereum Bitcoin is doing on a macro scale. These things front run, or these things are what lead us into an alt season. So I do wonder, I think with all the comparisons of quantitative easing and rate cuts that were more in a 2019 style scenario. You can even measure from when Bitcoin hit that 100-week moving average, when it had that flush. I wonder, again, that was 50%. Just from the time it hit the 100-week moving average till we started to break up, that was about 200 days. So, if we were going 200 days from the first time we hit the 100-week moving average, that would put us out into June. So we have that April to June timeline. And guys, for what it's worth, I don't love using time as an indicator or a predictor, but I am just making some comparisons, and I wanted to think out loud with y'all today about what quantitative tightening and easing could mean for the markets, how long we might kind of expect sort of bearishness down here, or even just some chop in these areas. But again, overall, I think it's important to just, these markets, they'll be a little bit different every cycle. And what's more important than the timing of it all is the price action. If we get Bitcoin breaking above all that resistance here, remember on the heat map where the shorts are piled in, then we take it by the next levels. If we see Bitcoin break through this important box here to turn bullish, then we have that 116 level. If you remember, that was the last large amount of resistance where we have shorts piled in as well. So I do think we just have to, there we go, 116, 117. I do think price action's king. We just got to take it by levels. Sometime we don't know how quickly or slowly these markets are going to recover. Let's go back to the weekly. Sometimes the markets recover quick. Are we in a COVID type situation where QE is, they had QE before, but when they really turned on the QE burners and we're printing a lot of money, right here, boom, you can see how we just shot up out of there from the bottom. So if all of a sudden, maybe that would be a more important factor. See what kind of QE is playing in. And if QE is pretty aggressive, then maybe, we would be in more of a V-shaped recovery. If QE is kind of gradual, then maybe it's going to take some time before Bitcoin eventually does well. And we continue on our trajectory towards an Altseason style top. Anyways, let me know what you think in the comments below. A little bit different of a video today. I'm just chewing on this data with the rest of you, and I don't claim to be an expert on it, but part of the reason for my channel is to just have a conversation. I'm really curious to see what you guys think about this. Where I stand. I believe we're on our way, and we are in a bear market right now, like 2019, and we're also in a massive bubble, and the Russell 2000, that's in all-time high territory. And so are things going to recover quicker than people think? That's what we've done prior times this cycle when we've had pullbacks, and maybe get an alt season, more towards the center of a cycle, more towards the middle, instead of kind of left center, or, for 2021, this was very left translated. So curious to see what you all think in the comments below. Anyways, thank you guys so much for watching. Tomorrow I'll do a Bitcoin mining stock video. We'll talk about the technical analysis of these guys. Again, I want to start doing more AI crypto videos as well. So stay tuned for that. And we'll talk about those in some more live streams as well. So thank you so much for watching. Have a wonderful day. Take care.